The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we've got a market that's a rocking and rolling. 1994 on the S&P Cash up 4.5 points with probably a great deal of volume. I don't have that one up. I probably need to get that back up. I basically have a lot of positions floating around right now, and what I've been doing is kind of trying to whittle down what I'm looking at instead of looking at too much stuff. And we're 1995 now. Of course, big move down to, if this is right, 1976 for the low in the S&P Cash today. I think I didn't see it go that low, but maybe there was a bad tick or something that happened within about 5 seconds that I missed. In fact, tried to actually buy the S&P in the newsletter, and I blinked, and the vehicle I was up was up $1 in less than 2 minutes. So very tough for a lot of people to play this. This is a fast market. Fast markets are very hard, but I'm closing in on my target on one of my options, and it should be there. I don't see any ticks through. I've got an order in, and maybe they're just avoiding it. It's not uncommon to see option market makers wander away from a tick price, especially if you put it in the newsletter, and a lot of people have it. But probably be pretty nice. I think I'm in an average at about 75 cents. I'll go out at about $3. So not a bad first round. I've got one that's probably not going to pay off that I'll lose 35 cents on. I've got the other ones that look very interesting, and we'll see how the rest of the day sorts itself out. But I'm probably going to have some winners and losers. Of course, with options, you have the ability to limit your losses right off the bat. And equities, I have one that I'm long, maybe down 3%. I may have to just pull the trigger on that one, bite the bullet, take the loss. But I just like taking the loss on that one right at the moment, because I've got another one, same sector, up very well. Of course, I got it's up 5%, but I've got calls on it, so they'll be going in the money here pretty shortly if they haven't. I don't get a chance to look at all these. Anyway, it is a rock and roll market, a little bit of country, a little bit of rock and roll, and we're going to get into the reasons why. I sent an email off to Andy Heck earlier. In fact, we've talked about this subject before. Andy has called in. I don't know if we need him to call in again, maybe. But I'll talk about it a little bit. If Andy wants to call in, he can. But it's echoes of the past. When I got and just started trading full time, one of the first things I walked into was a giant, huge problem in October of 1998 that a trader probably just getting and cutting his teeth probably shouldn't be walking into. Of course, you don't know what you're walking into at the time. But it had a lot to do with leverage, and I think a lot of people think we're at that same level that we were in 1998, but we'll talk about the reasons why I don't think we are. But probably somebody on the bad side of this trade is going to get cleaned out, but I don't think it means the market's going to blow up. But the longer they can hold these markets down, I think the better they're off. But awful hard to hold this market down. At least the option market makers think we're going to expire probably somewhere around 2050. We'll see if that number changes tomorrow. Anyway, on this day in 1835, a disastrous fire rages through Manhattan, destroying the New York Stock Exchange building. But Wall Street breathes a sigh of relief anyway. A strong box of documents showing who stands to gain and lose from the manipulation of stock prices is rescued from the flames by a brave and/or desperate broker. His grateful peers promptly give him a generous cash reward for going in there and rescuing all the documents. From then on, they made a much bigger attempt to make sure that there was a duplicate accounting and records for trading. And it's the same kind of thing like buying a lottery ticket. There's got to be some checks and balances in the thing. And they started implementing them after that. Never really has been a big problem, I think, other than maybe some bad ticks and bad trades electronically that's really caused problems since then. But on this day in 1835, we burned it to the ground, and they tried to do that today to the stock market. Now, I'm going to go back, and I don't have a real good chart here. You know what I'll do? I will open this up. I will go to the web page. And, long-term capital management. There's the Wikipedia page. I'm just going to bring this up, and I'm going to close that, and I'm going to kind of zoom in on this thing. Andy and I talked about long-term capital management. It's got to have been 6 months ago, maybe 9 months ago. I know he called into the show. I kind of vaguely remember it maybe being the springtime. But I said it was probably one of the most interesting things that ever had happened to the stock market. A bunch of people had gone and leveraged themselves to the hilt. Actually, my understanding was it was at least 99 to 1, maybe longer than 99 to 1 for this company called Long-Term Capital Management. It had 2 Nobel Prize winners. And the problem was that they started making money with basically what amounted to a martingale system. They basically thought that if they bought 2 sides of a issue, eventually they would converge, and at that point they would cover their positions and take whatever cash that was in there. This was all in bonds, by the way. And they had this wonderful thing. For people that don't know or are interested, I got into it, but it was called Ito's formula, ITO. Wonderful Japanese mathematician had figured out some of the ideas about going after this. But what you actually figured out, it was a martingale for all practical purposes. For people that have never been to Las Vegas to see people throw their cash away, a martingale system is where you just keep doubling up. And eventually when you win, of course, you make more money. And the whole idea is great as long as you have the cash. Now, basically, you could say we're in a martingale system right now with the Fed. They just keep doubling up and doubling up. Of course, they can continue to print money where most people cannot. Andy's on the phone, I guess. Are you there, Andy?
I am here. How are you, Mr. White?
Good. We talked about long-term capital management before. You were on Wall Street when this thing all blew up. My contention right now is that probably a lot of people in Wall Street are reliving their youth in 1998 when this thing totally blew up. Now, long-term capital management basically went long a lot of Russian bonds, which are imploding today. And I think a lot of people think that there's still somebody out there with 99 to 1 leverage or something, maybe.
Well, absolutely. I mean, I think that we're seeing that. We saw didn't the ruble go to like 79 to 1 before the central bank stood up again this morning?
Like 70. I saw 78, and then I blinked, and it was 73. So
right. There is a lot of that going on. I'm particularly worried, not just about Russian debt. I'm worried about the whole credit market because I think that I read somewhere that something like 20% of the credit markets now are invested, are funding oil projects.
Yeah, there's a lot of banks, but my thought is that, especially with maybe we're just good that maybe we had a huge hangover in 2008, and at least the U.S. companies probably may be losing money, but probably we don't have anybody that can blow up the economy.
Yeah. Look. Oil is the igniter here of everything that we're seeing. I think you'd agree with that.
I think that was the beginning of it, And I think that there was, of course, like you said, that there was a concerted effort to destroy the price of crude to hurt our enemies, the axis of evil, which is now Russia. And I guess it doesn't really hurt North Korea. They don't have anything. They're all eating grass there. But
right.
I mean,
Iran
and most of the other ones, Venezuela, the people that are all gone full tilt commie. But the whole issue is maybe it's worked too well, and I wonder if now Putin has nothing to lose, and we're also, at least I haven't heard anybody say it, but I wrote it in the newsletter this morning, that is, what is the possibility of Putin having nothing to lose and now going into the Ukraine? I don't think he'll do it.
Absolutely. I mean, look, he economically, his back is against the wall. He does have an outlet, Dave. I mean, he is selling crude to the Chinese, who are licking their chops and buying this crude oil, probably at a discount to world prices, which, hey, what the Saudis have done and what the Chinese are taking advantage of here is a holiday sale. 2 barrels for the price of 1.
Well, the one thing I'm wondering is, even at the lower price that they agreed on several months ago, what is the opportunity that China's just buying that crude from Saudi Arabia today, and even at the lower price that Russia isn't getting it now?
I think what, maybe I misread it, but what I saw is that the Chinese and the Russians put together a trading facility, and that crude, I think, is priced at market prices. It's just an outlet for them, not a locked price. I don't think that they bought at a fixed price.
Most of those contracts that I've seen out of China for energy, coal, natural gas, have all been at a fixed price, albeit much lower. Now, my question would be, at the fixed price, do they have to buy it? My guess is that they don't, and at the lower price, maybe they're getting it from Saudi Arabia at a much cheaper price. But they've got this
very possible.
Then they got this guaranteed spigot anytime the price hits $70, maybe, whatever they're selling it to them for. But my guess is that even at this level, probably, I saw a lot of work where they went through the places where Putin had, actually Russia, but Putin, for all practical purposes, since he threw the other guy that owned the crude company in the Huskow for 10 years.
Well, let's go back to the beginning of what you were saying, Dave. And look, with bond yields in the U.S. so low, and in Europe even lower, the hunt for yield has continued. So I think it's not out of the question to think that there are some rather large capital plays in this in these credit markets and in some of these junk bonds and sovereign bonds that are looking very ugly here, and that's the real risk we're running into right now. And the PhDs like Merton and Scholes, they showed us what happened in '98. We can have a repeat of that.
We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, Andy, I wanted to get back to probably the point, which is that the whole Russian thing, my guess is that a lot of people, especially people that were still around in the stock market in 1998, have this hangover of long-term capital management and are probably imprinting something on it that may be similar but not the same.
Exactly. And you know, Dave, history, people know in markets, history tends to repeat itself. And, you know, markets are driven by fear and greed. And in the current environment, you're quite right. You know, the fear is, are we going to experience a similar type of meltdown? Maybe a combination of 98 and 2008 once again.
Probably the difference is, of course, that the bond market basically worked into the U.S. markets and the rest of the bond markets around the world. So far, I haven't seen any contagion between Russian bonds. And, of course, they're going to be up in about 6 months, where I think about 6-7 months they're going to have to refinance everything. And if they don't recover anywhere soon, basically they're going to get nothing when they go to the trough for money. They're going to have a lot of interest and no cash.
Right, exactly, and that kind of feeds into your comment in the last segment about, you know, does Putin use this opportunity to pillage another country?
with nothing left to lose.
For their assets.
Yeah, for nothing left to lose, right?
Right, exactly. You know, the guy, someone like this is very dangerous when their back is against the wall. Maybe the strategy is that, you know, the rich oligarchs there might get, you know, maybe the West feels that they might get a little fed up here or losing their wealth like this, and take him out themselves. Maybe that's the strategy. I don't know, but he certainly has his back against the wall economically.
I think that one of the issues, of course, was that maybe they started this and the unintended consequence is that they had the crash. I think
absolutely. I think when they started it, they didn't figure that oil would be half the price it was in June, and how that reverberates through the world economy like not like a tremor, but like an earthquake.
Right, and normally what they do is make sure that it comes down, like they say, orderly. And right. They just slowly turn up the temperature. That it just fell apart like this, probably maybe some people picked up on it and decided to hop on aboard the train. They saw maybe the trades that that other people were making. Of course, those guys get to see, people at Goldman Sachs and Merrill get to see a lot of big movers asking them to move things in and out. So they always have a heads up above us.
Right.
On that part. So maybe they all decided to go short crude, and when everybody hopped on, it broke the back of crude instead of just being what the economists thought would be a nice move down. Nice, orderly move down.
I think if we want to look at the crude trade, Dave, very important to understand that a lot of professional crude traders, like my old boss Andy Hall, were along the back of the curve when it was in backwardation. So we had like a $20 discount for 4-year crude to nearby crude back in June. So they bought that crude, and then as the price started coming down, they started selling more and more nearby, which kind of cracked it, put it into contango, and P.S. here we are now in full contango. And I think that makes, and you're right, companies like Goldman saw those flows, Morgan Stanley, Goldman, J.P. Morgan, they saw those flows from the hedge funds, from the big risk takers, and, all the pressure's been in the nearby, in the cash.
Yeah. So anyway, I'm looking at a few things. I didn't like the way crude started operating. I had a stop in on Boyle. I didn't want the thing to close back under, I don't know, couple bucks higher than here it did yesterday. So I got out, and I'm kind of glad. But it looks to me, we had a question in the den about what you thought. I've seen it so much that it seems like it's natural to me, but the whole short natural gas, long crude trade with the way crude moved up here today, I'm wondering if they aren't right back at it, and there may be an opportunity in natural gas as soon as they get done putting all kinds of short positions on it.
Oh, I think so. Listen, I have a long-term, when I saw that question, I put a long-term chart. If we can put that up, I have a long-term chart on the crude natural gas spread, which is down to around 15.5. That thing has come down dramatically since crude has come down naturally. Natural gas has pretty much stayed stable, in a range between, $3.50 and $4.50 here, with crude plummeting. I think that there is an opportunity in this to be long natural gas here in the near future. Winter hasn't even begun yet.
Yeah, winter is coming for you.
It is coming
for you big fans. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and should be interesting. Hey, what else can we say? And as we move along, 1996-18 on the last tick. What else can you say? Volume. I want to take a quick look at that. We really haven't talked about that so far. Let's take a quick look at market volumes. 3.4 billion shares. So this is a huge day. Most likely some kind of exhaustion day. Anyway, I wanted to get back to a little bit of long-term capital management. My thought is that there are probably people out there that they can run out of the market. And you can, I guess you could see these people being run out. But it certainly looked to me yesterday when we started to see natural gas head down and crude looked like it was about ready to make some kind of low, that it was going to be darn near impossible. Also saw another article about the cost of production, or the average cost of production, and why the Saudis could move it down. It didn't make a lot of sense below $55. But anyway, I saw a fairly decent spreadsheet, went through it. I'm going to say that it probably has at least some validity out here. But, we're out here at $55.95, up a nickel on crude after it got down to, $52.95? I think I saw that. But 55 is probably the cost of production. It's going to be very hard to hold this thing down below that level. Doesn't mean that it has to go up. The Saudis can still print. But at this point, what it looked to like to me was that a lot of people were right back going along crude over the last 24 hours, and at the same time it's shorting natural gas, kind of a natural pairs trade for those people in that sector of the issue. So anyway, what else do we have out here? Anyway, wanted to look at a few things. Talisman Energy, TLM, this thing had a huge pop out here today. They are agreeing to be bought out. And probably the thing most interested is that one of the big men of Wall Street, Icahn, had a huge position at this at a much higher price. And he's going to at least be able to get out of this thing before it blows up in his face. TLM up quite significantly from a few days ago at $4 to $7.60 at the high today. Looking at a few other ones out here, especially with China on the pullback, I wanted to see how this was doing. And you had kind of a decent volume out here on December the 9th at 5 million shares, $56 on Qihu, Qihu. A little lighter volume out here today, 3.1 million shares, but not vapor. But get at least maybe putting at least a short-term low in this. Wanted to see, we've been talking about it since last Friday. That is Cameco. Wanted to see how some of these other commodity-based companies were doing. Of course, this is a nuclear energy, but also fairly good. And we've been talking about how this thing couldn't really get any volume below the $15.55 low from October 16th. 2.9 million shares there. So we're kind of in this with about half the volume over the last 3 or 4 days. Doesn't mean that you couldn't get volume tomorrow and the thing gaps down. But to me, it still looks very interesting out here. And again, a lot of volume on the downside. I would imagine you'd need some consolidation. But these companies start to look very interesting. Continental Resources, another one that looked like it pretty much extended its one-to-one ABC down out here, had some decent volume back on the 8th of December. But since then, it's, basically had volume on the 12th, but it went sideways. It didn't really get a lot yesterday, and maybe a little bit of short covering out here on something like a CLR. CVS Caremark, this one popping big time. I'm trying to remember what the news on this guy was. CVS analyst day guided inline, reaffirmed 2014 guidance, raised dividend 27%, added $10 billion share buyback. Let's see, Boeing Company. We talked about this the other day. I said that there's one company that I'm not going to be short. It's certainly going to be Boeing. And last night after the bell, they upped their dividend and at the same time are going to do a share buyback. Now, maybe they can hold this up even if the market goes down. I still don't see any reason to think that the Boeing company is going to be the weakest sister out here over the next 12 months. They've got a lot of orders. Even if half the people drop out, they'll still have people to give it, and then the orders will come back when the economy does. So the whole idea that you've got to have orders 10 years out, probably a little ridiculous in this business. They can build a plane in about 9 months from getting the order. And we talked about how Airbus is going to probably have a big hairball stuck in its craw from killing the A380, the double-decker plane that they haven't gotten an order for in a year. And it's still, when you're almost in a monopoly position, which Boeing is probably going to be in with Airbus, and they're going to have big financial problems in the coming year. Europe is in the toilet. They're not selling any of these planes that they had to make and probably sell 10 years worth of them to make it back. Also, it's a kind of a make-work project anyway for all of Europe. They wanted to make sure they had their own aviation industry. And part of that was just about everybody gets their palms greased over in Europe. And I just can't see long-term how that works in a capitalist world. And as we go more and more capitalist over the world, we try to dally with our socialism here. But one thing that's good is we may just have a little less socialism than they do in Europe, but just all the countries getting involved and everything else has never been a good idea. You get a lot of things designed by a committee, like a horse design committee, designed by committee. So you got to watch that. Anyway, Boeing up on a bad day for the most part, but not unexpected, and I warned you. As always, you can email me at path@tfnn.com, and of course, you can call me at 877-927-6648. Monster Energy drink upgraded today, and not a bad day, not a bad looking chart either. This thing gapped up on the 7th of November, 2.8 million shares, and almost 2.9 million shares. Came back, tested it in the gap on December the 9th with 1.2 million shares, and not surprising to see this one up here, but I guess everybody continues to swill these things down at the bars, and that's all that matters. What else do we have out here? Whirlpool. Whirlpool's my next stock. Ongoing business diluted EPS of $14 to $15 versus 14.41 that they were talking about. So they're still in the range. Ongoing business diluted EPS of 10.90 to 11.10. Lowered a little bit out here. And, of course, Whirlpool, probably a good idea of what's happening out here in real estate. Down and has volume. Not enough, though. It's now just bucking into the big volume bar and sign of strength back on the 28th of November. But what was the close on that? 168.06. We got down to 174.30. I think you could see Whirlpool certainly come back into this big candle of the November 28th. So keep an eye on that. PGR, Progressive Corporation, announced that it will acquire a controlling position in ARX Holding Company, parent company of American Strategic Insurance and affiliates, for 875 billion shares. This thing, nice little dragonfly doji out here. I don't know a lot about the insurance business and whether this is a good deal or not, but the chart basically says, not all that bad after all. So we'll have to keep an eye on that. And Sprint Nextel looks like it's facing maybe a $105 million fine again. So some kind of bad news out here on Mr. Sprinty. You would think that this thing probably would have given up on this heavy volume down day of November 4th. But it never really has been able to hitch a ride. Volume has been light back down to these lows, and even low out here today. But I really can't seem to see a low on this. TLM Grub. Let's go to the Mr. Grub Hub. Upgraded to buy at neutral at Goldman, and probably not a big deal out here, but not a bad-looking chart out here when you think that this thing is back at some level of support. I didn't like the volume back at $30.91 on the 12th, so it's probably coming back here. But you got a lot of times where this thing has been coming back into this level right at $30, and it's acted as support. If this thing would bounce maybe up to $34 or $34.50, somewhere in that, come back down to $30 and let's say $30.50, and the volume really shrinks, 350,000 shares or something. This would not be a bad long-term consolidation out here for the Grub Hub at $30, so keep an eye on that. SPWR, SunPower, this thing tried to get it back into its high volume low of $25.38 April 15th, and you needed 4.7 million shares to break that. What you had was 3.4 million shares on the 8th of this month, 3.3 million shares the next day, 2.2, 1.6. This thing's popping back into the trading range, probably not a big surprise. Now, it's not back above 25 or 38, which is what you would really like to see on this one. So keep an eye on it. But there's some of these stocks out here that look like they're at the bottom of their trading range. And what's another one? I talked about Cliffs last week that looked also like maybe there just isn't any more left in the bottom of the tank of some of these, and Cliffs was one of them. It's up a little bit here today. $7 was the October 9th low with 15 million shares. We got down to $6.59, but never really got that 15 million shares. About half that all the way through. Looks like just under $7 here. If this thing could close back above $7, you probably have at least a temporary low, and probably a good sign that if you were short this thing, it wouldn't be a bad time to take some cash off. Question about the business of SunPower. I don't know. It says describe SunPower's business. Well, you got all these companies that do one of two things. They either make solar cells or they install solar cells. And design manufacturers deliver solar cell systems to residential, commercial, and utility customers. The idea behind this is that not only do they make the cells, but they make the panels, they make the hardware to attach it. They work out the leasing issues on these long-term and go into areas and get the governments to try to cough up everybody else's cash so somebody can buy solar power. Again, probably a bounce in this thing has more to do with crude looking like it's at a low than anything else. I still think this business is horrible. Mostly because with the new Congress, it's going to be almost impossible, since these guys were huge contributors to the Democratic Party, that these people are not looked at as the enemy by both houses of Congress. And I just don't see them getting anything through. And, of course, none of these companies make any money. We brought this up 100 times. People still love these companies. It's hard for me to love a company that does not make money without government subsidies. And I don't mean about like an F-16 or something like that where the government's physically buying it. I mean where, if you're a corn farmer, it doesn't exist without you being there. It's hard for me to see me wanting to be a farmer. I may be selling corn long or short or wheat or all those other ones. But I hate to be in a business long thinking that I'm making cash when the only thing there is the government standing behind you in bankruptcy, which is probably all these companies. And I could see this thing's almost off 50% off its $42.07 high for SunPower. I don't have any qualms of thinking this thing's a $10 stock in the next year, if not lower. It may bottom out here for a while, but if crude holds down here for a while, these stocks are going to get killed. It's the same thing. I've never been a fan of Tesla. We've talked about why this thing hit 195.37 today. It's got a little doji. The question is this the halfway move down? I know this thing's going about 130 where that gap is, and it's hard for me to see this. Now, energy did pick up in this last leg. We're almost finished with an ABC down. So could this thing go back up to 220, 225 or something? I wish it would, so I got a chance to go after it.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Looking at this market, looks like it's getting a little weaker out here as we come into the close. Let's pop back up here and take a look. 1990 on the S&P cash, which means we're going to end up out flat here. And I'm looking at a few of my positions out here, and what can you say? Going to win some, going to lose some, but overall not feeling all that bad about the way that things have set up. So we'll be watching into tomorrow. My guess is that we are going into probably a dovish announcement tomorrow for the FOMC. That's probably going to see us bounce up a little bit. I think we've got a bottom in crude. I certainly am kind of confused about the way a lot of the commodities are going, and that makes me think that at least someone thinks that there's another long-term capital management out there, and that is a company that is way too leveraged for the conditions. One wasn't able to get out of the positions and actually probably went full tilt boogie on adding to a losing position as it went down, thinking it would go higher. But again, all my flashbacks pretty much take me to that long-term capital management. I just think it's different this time. I think that, especially going into options expiration on Friday with the FOMC meeting, my guess is that the FOMC actually has a meeting January 29th and 30th. With all that's going on out here, my guess is that they will delay saying anything completely hawkish until that January meeting. By then, this crude move will probably have dissipated somewhat like the fog this morning around Tampa. And the sun will come out, and everybody will have a nice Christmas, and we'll see the numbers after Christmas, and they'll have a much better idea of basically which way the wind's blowing out here. So, what else can you say? I think there was a few other companies I wanted to look at before the end of the day. We'll see if we have one. PGR, Whirlpool, Monster, CVS, CLR, NAV. What was the deal on this one? 88 cents per share. Pretty ugly out here. Navistar International, of course, they make a lot of trucks and truck engines, I think. But certainly down on huge volume. It's going to blow out this $29.54 low from October 13th. If we go out here and look a little bit longer, looks to me like there's enough volume to blow out the February 3rd low of this year. And you're probably looking at this big gap that starts just above $25 and probably goes to, what, $26.50, $26.30, something like that. That gap is going to be where you would want to look at this thing anyway. And, of course, you always want to buy these returns on light volume. And this thing had a monstrous sign of strength that went back to 2013 in, March 7th of 2013 with 16.8 million shares. We don't have anything like that. So you're probably going to find some decent support as we get back into these gaps. Like I said, it did come back in there on July 24th, 2013, and it's had a nice trading range out here for Navistar, but I digress. Anyway, we've got a great 3 more hours of programming here on TFNN. We've got Tom O'Brien directly after the show for 2 hours, the Andrew Heck show after that, and he's got a new article. And go check out his new article on Seeking Alpha. I don't know, did he post it in the den? Maybe he should post the link. Anyway, we'll see you tomorrow, same bat channel, same bat time, and we will take a look at it. See you then. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.